Voilà, mesdames et messieurs, bonjour, soyez les bienvenus dans ce très bel
Welcome to this very nice
MEDEF, le mouvement des entreprises de France, pour cette conférence qui arrive, je pense, à un point de cette conférence de la Fédération bancaire française, qui est l'occasion, la présidence
under the French
du
Presidency
Conseil de l'Union
of the EU decided to organize this conference.
particulièrement intéressante.
And this is going to be quite interesting because we're going to be focusing on a topic, and as you can see it on the slide, for a strong and competitive financial Europe. So I believe that both adjectives are quite important given the global macroeconomic context. Strong and competitive, those are operative words. And we're going to try to really discuss those matters and drill down as much as we can. And this topic is going to be broken down into two important panels with high-flying guests, quite competent. The first one is going to be focused on the role of banks in the financing of growth because the various crises, whether COVID-19 war in Ukraine and growth, which is slowing down worldwide, plus inflation, which seems to be structural today, all those deserved a panel around the role of banks in the financing of European economic growth. And the second panel, here again, those topics are quite paramount and heavy topics because the future is at stake. The financing challenges when it comes to ecological and digital transitions. Two figures. I was struck by two figures, and I really wanted to make a point of giving you those figures before getting started with this panel to illustrate the first one, the financing of growth. The European Central Bank was issued a recent document that said that for one invested euro, for example, invested in a bank or whatever, we're talking about 15 euros less for the financing of for companies. So companies are behind jobs and growth. And another figure, which is a good illustration of ecological and digital transition. And the European Central Bank still and our high-flying guests will correct me if I'm wrong here. The European Central Bank was saying that ecological transition per annum in Europe between 300 and 350 billion euros, which we'll need to put on the table for ecological transition purposes, and the digital transition, roughly 125 billion euros per annum to be successful in this digital transition. So two panels which wanted to organize this way so to try to really discuss those matters. This put forth by the French Banking Federation for a strong and competitive European banking sector. So at the end, we'll also have some time, for example, cross-sectional vision between Nicolas Théry, he's the head of the French Banking Federation, and a guest who will be with us remotely from Brussels because she's the European Commissioner for the Financial Services, Madame McGuinness. She's going to be with Nicolas Théry. She's going to be concluding this morning's session, and we're going to be talking about all those different topics which are quite relevant in the banking sector, the corporate sector, and which consumers are highly interested in. Before I kick it over to Nicolas Théry, the head of the French Banking Federation, he's going to be introducing the session. I'd like to apologize on his behalf. Let's have a look at this video of the European Deputy President of the European Economic Monetary Sector, Madame Tinagli. She was unable to make it this morning to introduce this conference and set up a framework. Let's actually listen to her, and then Nicolas Théry will be with us.
I would like to thank you for your invitation to this event. Unfortunately, today's plenary agenda does not allow me to be there with you. But despite this, I wanted to bring you some brief considerations. The topic of your event today is really interesting and very timely. We are living in a time of big changes and great challenges. Starting from 2008 and for some years, the European Parliament and the other EU institutions have been busy repairing a financial system that after the great financial crisis had become a burden for the economy and for the taxpayers. So we had to respond to a massive supervision and regulatory failure. The European Parliament, and in particular the Committee on Economic and Monetary Affairs, has been one of the main actors in the creation of a genuine and strong financial supervision at the European level, as well as in the definition of new rules that made our banking system more solid, more resilient. And I think that the robustness of banks across the Union in these last 2 difficult years shows how effective that action has been. However, after the repairing, I think now it's high time to look forward. The Commission's spring forecast has unveiled a sad and naked truth, and I believe there is nobody in Europe who does not share this sense of urgency. We need a strong political response at the EU level, which should be rapid, bold, ambitious and comprehensive. So we need to think about how finance can contribute to growth. And I think really this is a key ingredient of this response. We have to make sure that finance is put even more than now at the service of the real economic recovery. In particular, we have to identify the right incentives and the best suited institutions that can support and encourage the channeling of financial resources to long-term investments, such those that we urgently need in digital, social, environmental transition, to face the energy crisis. One of the main actors of these pictures are, of course, banks. They are important processes underway on the role of banks in this context, and you are well aware of this. As for banking regulation, I'm confident that the work still to be done on the finalization of Basel III will be conducted efficiently, and I do not see major difficulties in concluding without big controversies the long cycle of necessary improvement of our prudential framework. Now, this process is inevitable because only with adequately capitalized banks will it be possible to face the challenges that we have ahead of us. All risks must be adequately covered. We must shy away from the rhetoric that higher risk coverage would cause a decrease in the volume of loans. At the same time, we also have to avoid seeing risks where they are not, or seeing high risks where they are low. So we need to find a balance. The Commission has already done a good job, I think, in this regard, ensuring that the Basel standards are, on one hand, faithfully integrated into our jurisdiction, but on the other hand, taking into account the peculiar characteristics of our banking system. So, of course, there is a debate ongoing in the Parliament, but I'm sure that Parliament will also uphold this important principle and work to find a good balance. But banking regulation is only part of the solution. There is another step that we need to take and on which we have not yet being able to deliver. It's the completion of the banking union. We must absolutely break the current deadlock while knowing how challenging the issues at stake are. Providing a third pillar to the banking union, removing the regulatory limitations that prevent cross-border institutions from managing capital and liquidity more efficiently, and enhancing the crisis management framework. So we really appreciate and support the great effort that the Eurogroup President is putting into finding a political agreement on an ambitious roadmap on this regard. And here too, we have to be careful and we must avoid the temptation to see risks where they do not exist and not to see them where they do exist. So I believe that the greatest risk we are underestimating in this process is exactly the consequence of abandoning the banking union project halfway through. Destructive dynamics would take place precisely at the time when the union is moving to favor ever greater integration into other sectors. So there are now just over 2 years to go until the end of this parliamentary term. The implementation of the Basel standards are already on our agenda. We are intensively working on them. And if we also add the proposals for the completion of the banking union, and we will be able to move forward in this direction, it will mean that we will have really taken an important step towards adapting our banking system and its institutions to the new challenges that we have to face.
Voilà, merci beaucoup, évidemment.
Thank you very much, Irene Tinagli, the Deputy Head of the Economic and Monetary Commission. Thanks for having introduced this debate. And she's saying quite a number of things to Nicolas, Théry, the Head of the French Banking Federation. Please come and join me. And perhaps I say a few words, introductory words. And Mr. President, we heard quite a number of things from the part of the President. Thank you very much, Eric. Hello, good morning, everybody, and thanks for being with us. Quite a number of people here. This is quite impressive. We had, we're no longer used to seeing so many people physically present. Now, before answering Eric's question, I just wanted to say that I wanted to make a point. I mean, this is Maria Atig, and the entire team actually organized this session with the help of MEDEF, and I'd like to take this opportunity to thank them for this organization, because such events require a lot of work. This is to really make things as smooth as possible. Irene Tinagli presentation was quite remarkable, because she really described the situation as it is quite effectively and underscored the relevant questions, and I believe that half a day, such as today's session, is about raising the right questions. The rabbi is spending 15 days in the yeshiva, 15 years in the yeshiva, and said, okay, got all the answers. Ask me questions. Well, that's the anecdote. Let's actually do it the other way around and perhaps clarify questions. Well, the first question or first remark in response to this presentation, or the introductory remarks, we got a great opportunity in France. Ours is a strong banking sector, a highly engaged one, present segment, which is in line with the common culture, and I'm quite struck by this. And the 350,000 employees working in this sector share this culture. It's a relational banking culture, territorial, time-based banking sector, from the most modest to the greatest companies. They support all those different companies, and I believe that this is not enough, it's not highlighted enough, and we got a very specific evidence for that. For example, who gave 745 billion in grants, years in terms of grants? We can see all those media covered people, stakeholders, and communicating people. How about one single loan? A state loan that they would have actually given. And this was a great opportunity, but we could also really make sure that this has to remain an opportunity. And Irene Tinagli was actually underscoring this. We got a historical mission. We need banks. We really need, well, in the face of all those economic difficulties which we're facing, but also in the face of the climate change and digital challenges. You know, the figures, they're quite colossal. In other words, 5% of GDP per annum, 3 to 4 for climate, and 1% for digital transition, which means about 1/4 of the investment, which means that we need to really get rid of quite a lot of capital today, which is not productive from a climate standpoint. Let me give you an example. The climate debt attached to our housing, 220,000 euros. The serious work for the renovation, revamping, 40,000. So we realize that, hence the question, who's going to be putting the money on the table? The state. This was a great temptation in the last 3 to 4 years, but at some point we're going to be reaching a threshold with regards to taxpayers. Now, shareholders? No, shareholders are not necessarily highly fascinated vis-a-vis this transition and the transition from unproductive capital to productive capital, and we'll be reaching a conclusion. Those people that can actually steer this whole process is the relationship between bankers and others to be able to do this. So we need banks. And since we need banks, we also need Europe. Why? Because there is a European banking model. Christian Ossig, General Director of the German Bank Association, and welcome quite a number of other people. State Secretary of the Chancellery, Næss-Schmidt, partner at Copenhagen Economics, Madame McGuinness, European Commissioner, and they will be our contact people. And Etienne, Fabrice de Saché, Vice President of MEDEF, and Monique Barbu, head of WW Air France, and Karine Cross, head of Carrefour's engagement. And I believe that this is a nice confrontation because we'll see how Europe may give us an added value and shy away from those sometimes fruitless debates. Dominique Labourez is a major stakeholder in European debates, and we all know, because we both worked in those circles, that sometimes Europe is somewhat of a negative spiral, because when you're overly focused on national interest, then European interest disappears. And I believe that that's where we're very happy with the work, especially with the German Association, to see that sometimes we need to be able to go beyond this and find some European interest. And really get our shoes dirty so as to have our economic and social model prevail, because talking about climate transition and digital transition and supporting people and marginalized people, we're talking about a social and economic model, European model. And I would like to wish all of our panel members, as Irene Tinagli said, find the right balance. In other words, find the right solution. Without really having a system in mind necessarily, for example, the Basel III and the Basel III finalization. Sometimes I'm tempted to add a figure to this. And the rules put forth by the Commission represent a good starting point, and there are areas for improvement on the financing of residential real estate, for example, on non-listed companies and market risks and strategic participations of 5 amendments. I'm not going to bother you with all those considerations, but those could be part of the debate to find the right balance. Not so much with this fruitless debate between public authorities and banks, but around a zone, a common area, which is as follows: how to succeed in those major long-term financial challenges and investments. I wish you a very nice session, and I will be listening to you with great pleasure before coming back for the conclusive remarks. Thank you very much.
Merci.
Thank you very much. Now, the challenge is quite an important one. You define the rules, and we'll try to really be up to snuff and Théry. So we'll start the first panel, as I was saying, just to illustrate this idea of a financial Europe, a strong and competitive financial Europe. The question is, prudential ratios, the Basel ratios, well, President Théry reminded us of those. We'll talk about the role of banks in the financing of growth or economic turnaround. We're talking about a soft turnaround and structural inflation. Some people are also referring to stagflation. Sigurd Næss-Schmidt, who is a partner at Copenhagen Economics, and he's an economist. Christian Ossig, who's already been mentioned by the head of the German Association, Atig, the general manager of BF. Thank you all three for joining me.
Voilà, Madame, Messieurs, vous avez évidemment des micros. Installez-vous. Si vous en êtes d'accord, puisque après tout, nous sommes, j'allais dire, entre nous, je vous appellerai par vos prénoms, ça vous va, hein? Christian, Maya et Sigurd. Je vais commencer avec vous, Sigurd, tout de suite.
I'll start with you, Sigurd. Okay, we'll take advantage of your presence here to start with the end of Nicolas' presentation on Basel and those prudential ratios and the challenges today, the Basel challenges on banks. It is said, and we can see this when we follow the sector, those are really major challenges. And if you agree with us, let us actually share a macroeconomic item here. I would like to take Christian Sigurd Mariatig's presence into consideration and talk about the economic situation, because if banks need to to finance the turnaround process and the economy. We need to agree on what the situation is like today. You have the floor, perhaps, for this very rapid comment on those criteria. Microphone.
Parlez dans le micro.
Speak in the
Voilà.
I will try to speak French today.
So, first of all, we have been going through some really difficult times for some time now, first with COVID and then with the Ukraine. However, it really now is time to implement and I have 4 main points that I want to share with you today. The first of these is that we need to base our diagnosis of what happened, on what really happened in 2008 in the US and elsewhere. The second point is that we need a dynamic approach based on the questions, the real doubts, questions that banks have. And thirdly, we must have proper rules for competition for banks that are within countries and for banks in other countries. The fourth matter, which is the argument made by the President and the Econ Group, we need to find the right compromise between stability and growth in the global financial system. So firstly, I would say that there are many different diagnostic methods that tell us that the losses in the financial system in Europe is not linked to housing mortgage loans as in the US. So this means that we don't necessarily need the same protective methods in Europe as in the US. Another point of consideration is that there was a mandate from the G20, we must ensure that there is representation in the capital is significant. We must ensure that the system that we are proposing handles real risks in the system. And thirdly, that different banks in different countries are on an equal footing. I would say that the first proposals we've been working on for a long time. This is based on a number of studies. I think the proposal from the Commission is certainly better. Certainly, if it is given, certainly if the means are allocated to the banks that really need this support. So I think the proposal really is headed in the right direction. And then I would say, lastly, and perhaps the most important point, is the question of how we find a balance between growth and stability. There are a great number of studies now that show that at the time when a bank in a country where the country is functioning normally, if that figure goes over 15%, there is no increase in stability. That's the first thing. And the second thing is, if you force banks to increase their capital ratio, the costs of finance will be far, far higher. And so it makes absolutely no sense to force banks that are already solid and stable to increase their capital ratio. It's the CBI, the FBF, they all agree with this point. When you're setting up in Europe, what you want to look at when you're considering Europe, are we forcing the banks to do this, and are these banks that are already well capitalized? And really, this is not about a compromise. We simply need to see if the issue is really, the consequences is this really leading to the banks that need this additional support. So, thank you very much for that. I see that Maya Atig has made some notes, and if I can make just banks, I found a sort of red thread, finding the right balance in what you said, the right balance between stability and growth. I think you said this several times. Maya and Christian, can you tell us, Christian Ossig, please go ahead. The microphone should be on. Excellent. Just a couple of points before I begin. I'm perhaps a little less brave than Sigurd. You might call me cautious, but please forgive me, I will be speaking English. I could try to do it in French, but it would certainly be more amusing than it would be enlightening. And so I have to say it took me 15 minutes to make that decision, and so I will now switch to English.
Challenges. And that's not only the banks, that all of us, the societies. And the solutions to these challenges, in my view, there are European solutions. And that is what we're going to talk about today. And in order to come to good results on European level, we need to cooperate. Foremost, Germany and France need to cooperate. I can tell you that on the level of the banks, the French and the German banks, we really live that. It's only a week ago that Nicolas, Théry, and my president, Christian Sewing, the CEO from Deutsche Bank, they had a joint meeting or joint conversation with the German Chancellery, for example. We do that on a very regular basis. We have an ability to compromise, and that is what Europe needs. Now, I don't want to be too much of kind of sending statesman messages up front, but I would like to thank Nicolas, Maya, Etienne, and the entire team of the EBF for that excellent cooperation, which works well, and I must say it's also fun. Now, back to your questions. And I was listening to what Sigurd said very carefully. I think as far as the economic situation is concerned, the situation is worse than many observers think. We have an extraordinary situation here where a number of unrelated different crises come on top of each other. And I would say that the economic models that the ECB and other institutes run, they are not able to reflect properly the risks we are facing. And I could start with the topic of inflation. Looking at growth first, it has to be said, and that is what the Commission actually announced yesterday, most European countries are still below the level of GDP that we have seen before the pandemic, right? Unlike the United States, where we see inflation, they had seen significant growth. Here in Europe, we are still below the level we had seen pre-pandemic. And yet we have the very high inflation rate, 7% plus. And what's more worrying, an inflation rate that is likely to stay with us. The outlook for next year is not encouraging. It's 3% plus, significantly above the target level of the ECB. In my view, that requires decisive action. We have seen the Fed acting by increasing rates by a speed that we have not seen for 20 years. And if I read the signals, the European Central Bank is also talking about increasing rates in their meeting in July. My message here is very clear. An increase of rates by 25 basis points is not enough. We need a very clear, strong signal we need to leave negative rate territory. And that is my appeal. The European Central Bank needs to increase rates by 50 basis points so that by the summer at least we have left negative rate territory.
Merci beaucoup, Christian Ossig. Je vais passer la parole à Maya Atig. Alors, je reviendrai sur ce que vous avez dit en
Thank you very, very much for this, Christian. I will come back to this point about an increase in 25 base points, which you're saying is not sufficient. But if I may turn to you, Maya, we've heard from these two other speakers on stability and growth, on rates, and if I may introduce you perhaps more generally, you are the General Director of the French Banking Federation. Tell us what your assessment is of the French macroeconomic situation, please. Thank you so much. Let me thank also our guests for sharing this panel with me. It's true that I am lucky to be the only one here speaking my mother tongue, with Eric, of course, so we have a much easier job of it. But if I can explain the things that need to be done in order to fund and finance this growth. At the end of the day, we are dealing with a great deal of uncertainty, lots of unexpected events that have, as we've been saying, come on top of one another. Monetary policy, which is obviously having a significant impact on the banking situation. We talk about the Basel regulations a lot, but there are lots and lots of other regulations that affect the banking sector. And what we're seeing is that these rules and these regulations that Ms. Tinagli of the European Commission was saying earlier, all of these are very, very cumbersome at the end of the day when you look at all of the things that need to be adhered to. So in giving a loan to a company, for instance, the number of documents that have to be requested and obtained, taking into account the risk and also management of this loan throughout the life of the loan. There are lots of rules, not just obligations in terms of capital, liquidity, cash flow, risk management, and so on and so forth. So all of this is extremely cumbersome. And obviously the role of banks is to integrate all of this. Their function, the function of banks at the end of the day, is as an integrator. This has been refreshed. This is a strategic role, integrating all of these countless rules in order to perform their service rather than rounding the edges, as it were. And so the purpose of French banking, which has a different model to German banks, for instance. Our role is to depend on our stability and use that in order to offer as many services as possible to as many clients, these different clients. And so there is this very intricate system of how this all fits together across branches, customers, large accounts, small accounts, individuals, companies, loans, mortgages, and so on. How do we integrate all of these calculations, all of the rules and regulations that apply, and continue doing our business? And so what I'm trying to say is that we cannot reduce this, as well as the Basel transition, to a purely technical issue. There are political dimensions. Yes, absolutely. Can I ask you a question? We can see that banks are being asked to have real-life stress tests, full-scale stress tests for some time. And we've seen also Brexit, which has impacted the robustness of banks. We have the health crisis. We have the war in Ukraine. We can, these are real life full-scale stress tests. Yes, Nicolas said this earlier. We are all living through these situations of real stress as banks. And actually, what we have to do is to allow ourselves not only only to be driven by the rules, which of course have to be adhered to at all times, but really what is the purpose? What is our real purpose? To be, let me answer that, to be useful when it is necessary. There is an old adage that says, it's very easy to give someone an umbrella when it stops raining. This is what we must absolutely avoid. We have to work in partnership and be together, work in a cooperative fashion. And this is why it's so important for us to have representatives of German banking here and others, precisely so that we can contrast and look at how we have accompanied growth in the past in our different business areas, and at the same time abide by the rules that do need to evolve. You have called it the Basel regulations with the famous prudential ratio. There's strong competition, of course, compared to the Americans. But we'll also, I'd like to ask Mr. Sigurd also for his opinion. He was saying that interest rates, real interest rates, are in negative territory. They have to go into positive territory. He was saying that 25 base points is not going to be enough. Christine Lagarde said recently that we're looking at 2 further increases. But the question for the economist and the head of German banking is that we are in a situation of stagflation. We have very low growth, close to zero in France, and inflation that is growing. So we reduce interest to get the recovery, and we would do the opposite for another aim. So how we can't do both at the same time? Are you sure that plus 25% in interest isn't going to break down?
From my point of view, we can call
it was a problem in Germany. Well,
we are witnessing. We can call that stagflation. And I see policymakers are very reluctant to use that expression. But if I look at European growth, if I look at German growth, we see very low growth this year, but that is mainly a statistical effect from last year. So bottom line, there's hardly any growth in Europe this year, and we see, as we discussed before, very high inflation. Now you say, what about increasing rates in an environment of low growth? My response to that would be the ECB has other means to foster growth than through negative rates. And in fact, we have seen that negative rates have not had an impact much on helping growth, especially and I have to underline, negative rates do not have a big impact on fostering growth. When I say ECB has other means, I'm referring especially to targeted purchase programs. Right now the ECB says they want to stop purchase programs first and then leave negative rate territory. But we have the purchase programs and they could be reactivated if the economic situation needs it. And my second point, and I stop here, inflation and growth. What we see right now is that consumers across Europe are losing confidence. And that is hurting economic growth significantly. Consumers are losing confidence because of the high inflation you're witnessing. So fighting inflation means also bringing consumer confidence back, and by that, helping economic growth.
Merci beaucoup de ce point de vue intéressant. Sigurd, maybe you have to practice your English now. It's the only way for improving. Est-ce que vous partagez le point de vue de Christian Ossig?
Do you share the opinion of Christian Ossig? And before we get back to Belgium, do you agree that there are a lot of things in common between the French and German situations? In Germany, the driver is exports, whereas in France, it is the consumption by households.
Let me...
those are the drivers of the economy in these respective countries.
Rather than Voltaire, I think I will increase the precision of remarks. I think we should go back to the economic situation prior to COVID, both in the United States and Europe. In fact, at the time, if you look at standard inflation rates, wage inflation, so on and so forth, they would probably have mirrored already at the time interest rates that were 100 or 200 basis points above the level at the time. And you can ask yourself why interest rates were not raised well before. Clearly, they were not being raised through the period of COVID for many reasons, but we had already relatively high inflation, both in the US and in Europe, compared to a situation of negative interest rates. There's been a lot of studies of so-called normal interest rates, and they have never been in negative territory, yet with the wage inflation in Europe was close to 2%. So we are starting from a position where both the ECB and the Fed, I think, has been significantly behind the curve. Now, the situation, the discussion now in the US is about the president of the Fed, Powell, going out and say we need to have to increase rates above the so-called natural rates. That is rates about 300-400 basis points, way above where we are now in Europe. That goes then back to, yes, but how does that fit into the economic situation we have? No, let me put that in two different perspectives, the effect on GDP and the discussion we had on the Basel. First on GDP, there's a lot of studies showing, and here I completely support what Christian's saying, when you go into negative territory and you also look at other parts of bank regulation, it's not clear at all that it actually helps banks finance. First of all, because in most of Europe, the negative interest rates have not been passed on at deposit rates. So the banks are actually absorbing these costs. Secondly, you have liquidity requirements that forces banks to hold some of the deposits in safe assets. What is the return on safe assets? Negative. So you are really punishing banks very hard, and there's only one place that can get their money back if they don't want to go bankrupt. That is by increasing either the rates they are requiring when they're financing things or being more cautious in the lending. So there are several studies that shows on the margin that you go into negative territory, it has zero positive effect. On the other hand, if you're looking at how financial markets have developed over the last 4 or 5 years, it has certainly not increased stability. So I think when you look at the two goals for a central bank, it is helping growth by controlling inflation and creating long-term stability. So my perspective, and I'm completely clear on this, negative interest rate does not help growth, and it clearly create the conditions for instability long term. So just a few words here on what is the link here within the Basel. Now, if you're going to increase interest rate with, let's say, 100-200 basis points over the next 1 or 2 years in Europe, will that not increase losses, for example, in the financial sector, and will not require more capital? Mm. Yeah. So what I'm saying here, we have two elements in banking regulation. You have the Pillar 1 and the Pillar 2. So I think the long-term Basel EIB regulation needs to focus on the long term. If national authorities, bank by bank, is concerned about losses in a situation of higher interest rates, they have the Pillar 2 and they have stress tests to make sure that the immediate impact is not leading to bank problems. So that's my view.
Alors, on va revenir évidemment sur Bâle et la réglementation.
We will come back to this matter of Basel and growth, and we had this question also about the drivers of the economy being different in France and Germany. What we also need to take into account is that the FEB has a growth target. But Atig, let me ask you, when we're looking at our French public, it's very different to what happens in Germany. But when we're asking the question who can finance a turnaround in the economy or an economic recovery, he can inject some liquidity when we're going well beyond the Maastricht criteria. And it's obviously true what Sigurd has said. There are lots of regulations, Basel just being one example, but do these regulations reduce an interest level that would support the work of companies? So €1 that gets stuck for whatever reason, for the capital deposits or other, that means €15 lost in the economy. These prudential ratios are ultimately stopping a little bit, perhaps even very much, preventing banks banks from investing in the economic recovery. I think there are lots of people here from the authorities, representing the authorities, that would disagree and that would say the distribution of credit has been very, very dynamic in France, especially over the last 10 years or so. And this has contributed to French growth. We, again, are the country where home owner loans are amongst the highest in Europe. We're also the country where the rate of acceptance of loans by companies from the smallest to the largest is, again, the highest. This goes beyond 85 to 90% even. And so, yes, there are rules, and yet they are implemented, they're applied, and growth is continuing. So there's no problem. But I would say the reality is different. This is not true. Regulations force us to make choices. And so what this means is that there are segments, sectors of the economy that are no longer served. So you will focus on the national market or sector. You may be focused on particular clients, some of them, but not others. And you may have to choose to or be forced to give up profitability. And so a lot of organizations are highlighting the issue of profitability, because ultimately, if your capital is immobilized on activity that is not very profitable, this is seen in the overall balance sheet. And so from a purely econometric point of view, examining the rules and the impact on loans, it's difficult to prove clearly that this is the case unless you also look at other economic areas. For instance, growth in the US is very, very different. And obviously the fact that credit is managed differently over there, and I'm thinking specifically of housing. And the fact that these loans don't spend time very long in the banking sector, it quickly moves on over there, whereas here it tends to stay. These are clear elements in our model that differ and that lead to limits after a certain amount of time. And so, in other words, the assessment I think that we can make of this, and we will continue looking at this throughout the day, we will have to look at this market by market and type of activity by type of activity according to our needs. And the analysis done by Copenhagen Economics shows that residential housing, the financial markets, there is a real future risk for the future, and there are impacts that have already been seen in terms of changes in recent years. But just a very simple figure, perhaps we will talk about this a little later in another of the panels. One figure that illustrates the gap in competition between countries is that in 2009, the first American bank was roughly the number one US bank in terms of stock market value, was roughly the same size as the European counterpart. And in the US, nowadays, the number one bank in the US is the equivalent to the sum total of the top 11 banks in the Eurozone. And this difference in potential is seen not only in the staggering decline in the number of loans, but also in the growth. And this is because we have very, very different, and this is why the rules must change.
Now that's the point. Insofar as competition, and I'll use this because we just talked about it, but competition between European and American banks with different prudential rates, and Mayati was actually referring to this quite rightfully. Credits and loans are not actually inscribed in the balance sheet as they are in Europe, and securitization of derivative products in the subprime crisis, those were very complex, hence this incredible financial crisis. Now the difference between American banks, and same question to you, Sigurd, and European banks, is that difference? Or is that difference neutral? I mean, we're just playing with the same ball, the same rules, the same dimensions, or we're not running as fast in Europe?
Competitiveness of European banks. And that's also a question of European sovereignty. That is what Europe, Brussels talks a lot about. strategic sovereignty, the largest initial public offering or secondary market offering, equity stocks being sold in Germany this year, the largest transaction is led purely by American banks. There is no German, no European bank in the lead of that offering. And Europe, and we have learned that also on the back of this energy dependency on Russia, we have to ask ourselves, is it the right decision to rely to a large extent on foreign banks from a European perspective? We talk about financial services. If we talk about Basel, and I just in the last couple of days I had a number of exchanges with US policymakers. We talk a lot about Basel because it leads to significant capital increases in Europe, in France and in Germany. American policymakers, American banks are not, Basel is not very high on the agenda. They're going to implement Basel only for the very large banks, and they're going to implement it after we have implemented it. So they're going to look at what is Europe doing, and then they kind of will calibrate something that suits them. And as I said, I have to underline it, with little impact on US banks. And the Basel compromise that is on the table right now, it is a compromise, it is a result that harms Europe. It does not harm US banks, and we could go back to 2016 and ask ourselves, why is that the situation? What went wrong there? Why did Europe not negotiate with a single voice? Instead, as ever so often, there were a number of different European interests at the table. But I would like, before finishing that, if I may, leave also with you with a positive reflection here. And that is, the banks are at the side of their clients. We have seen that in the last 2 years of the pandemic, and that is also our mission, and that is what we are working for all day long. We want to be also at the side of our clients in the future. I can tell you that is not easy for a number of reasons. And to be very clear, we said competitiveness with the US, we were talking about Basel. There is a shortage of capital within banks. I hear European banks telling me that they have to decline business, client requests, because there is not sufficient capital. Now we are talking about implementing a Basel proposal that, even if we use this good compromise that the Commission has put on the table, will lead to a double-digit percentage, 10% or so capital increase in Europe. That will increase capital shortage. And it's not only Basel. Brussels, the Single Resolution Authority, is collecting 80 billion into a Single Resolution Fund. That is 80 billion capital withdrawn from the European banking system. And I could go on, and I would like to conclude, thank you, Maya, with one reflection. I spoke the other day to a very large US investor, blue chip, not a hedge fund, someone that really, with a very long perspective, owns stocks all around the world. It's US pension money. And they sold large position in European banks. You could see that in the share price of European banks in the last few weeks. Asking them, why are they exiting European banks? They did not say, oh, European banks, you do not control your costs. You do not understand digitalization. None of that. They said, you guys in Europe, you lack the backing of your policymakers, of your supervisors. And we are entering in a world where capital is going to be a very important criteria for competitiveness. And you're not going to be on the winning side. That is why this investor, large US investor, and you could read about that in the news, not the reason why they're exiting, but that they're exiting because they doubt our competitiveness. And their main argument is not management capabilities, it's the policy environment European banks are operating on. That's not a good result for us, Maya, I must say. Huh? Because our job is to create a policy environment that makes European banks successful and also attractive from an investor's point of view. And if I may, one very last point, the same investors tell me, you European banks have an issue with capital, but not that you have too little capital, your issue is you have too much capital. I leave it at that.
Merci, Christian. Sigurd Næss-Schmidt.
Thank you, Sigurd Næss-Schmidt. When I listen to Christian Ossig, I have the impression that he's pretty clear about the level playing field. Now, does that mean that the geographical zones of the United States and Europe, for instance, would actually head toward financial independence? How can you respond to those very relevant questions from Christian? Microphone.
I think I'll divide it into two questions. The first one is about the ability for the EU to have really a common financial market. So that at least two questions here. There is, do we have a common banking market? No, we don't. There are a number of different barriers to actually creating a common banking market. A lot of regulations in this area, and there is a lot to look at. So look at this. Secondly, I've also been involved in a lot of work in venture capital and private equity markets, and it's remarkable that EU increasingly have a number of places also with EU, with the UK now out of it, who have strong capital markets for financing VC markets. We have a strong position in Berlin. We have a very strong position in Stockholm and some other places. Yet, we see again and again when we go to late-stage financing, the firms goes to US because we don't have the deepness in capital markets to take really large, successful firms to the markets in Europe. So I think that, and that is ultimately the only way to create a viable financial situation in Europe is that we create conditions under which big venture capital funds, private equity funds, and also banks can create the critical mass and scale to serve the clients all the way. You can easily do that with smaller firms, but if you really want to take large, successful companies to the market, that you have to rely again and again on going to the US, is for me a symbol of we have not created a deep financial market in Europe that can serve the growing firms all the way. Therefore, we have no strong investment banks in Europe that can compete with anything they have. The same with some of the big stock markets. So that we need to deal with. The second point is about leveling playing field in the implementation of Basel. Yeah. And I think there's around 15, 20 banks in total in the US who are using internal EIB models. Why? Only 15. First of all, probably because they have losses at a level where they will not have any benefits of thinking about EIB. That you can think about why we're moving into this in the first place. They have never really reformed the two big institutions who are the major players in creating the crisis in the US, the first one, namely Fannie Mae and Freddie Mac. Still basically unreformed. And yet we are now discussing implementing a Basel that is creating a situation where we are not increasing the alignment between real risks and the prudential requirements in Europe. So I think here we should, from an European perspective, go back to what I said before. Clearly, if there are banks who are insufficiently capitalized to cover the reasonable risk going forward, they should increase capital. But the problem is with some of the proposals going forward, they're not doing that. They are imposing higher capital requirements of banks who doesn't need more capital for prudential reasons. That is bank for bank stability, is bank for growth. And in particular, it's very bad for Europe to start saying, what we mean by equal treatment is that we treat different risks equally. We need a system where we treat equal risks equally. And that is the only way you can create a level playing field. And that is not what we are going to do. We are going to create an unlevel playing field between Europe as a whole and US, and we are going to create a lot of unlevel playing fields inside countries and between countries in Europe. That cannot be the foundation for something that serves growth and stability. So, conclusions, please create a really strong financial market, both the capital market union and the banking union. That's the only way you can get the big banks and the big institutions that can serve large clients in EU all the way. And level playing fields means globally treating equal risks equally from all kinds of different potential relations.
level playing field, Maya Atig.
Maya, now put the concept on the table here. Sigurd, I realized they got into the idea. In other words, this concept, does that have any echo? Does it make any sense to be really on an equal pedestal with the same ball and the same gates and so on and so forth? Yes, when the Bank Federation, the French Bank Federation, and then the European Bank Federation worked on the objectives of the new European legislature and European mandate, the sovereignty-related issue actually popped up quite a number of times with very practical impacts in Europe. We're not saying there should not be non-European stakeholders gaining market shares in Europe. No, this is not at all the issue. The issue is to have similar constraints, the same constraints for the same types of activities, and not have those differences in values and market shares for unjustified reasons. And for European stakeholders to be strong, we need to struggle against this European fragmentation, what we call fragmentation in our lingo, in this lingo. What do we mean by that? We mean that the stakeholder situation is considered on a country level and on an entity level, rather than considering the single loan market or credit market. And this objective of loan and credit market, well, it has been an objective for quite a long time. When I started out my career, there was French Presidency. I took over the speech made by the French President, Fabrice, at the time, Minister of the Economy and the Finances, and his speech was incredible on the union of markets, market unions, and this banking Europe, and the need for a strong banking and financial Europe. On the other hand, competitiveness was not as relevant because the top of the list priority people thought was to unify the market with similar rules.
And I think that's a moment where we should look quickly at the project banking union. Why? Because it is at the table in Brussels. The chair of Eurogroup, the Irish finance minister O'Donoghue, is really, it's a major effort that he's undertaking for months, right? And we're all asking ourselves, is he going to yield anything with our? But it's very high on the agenda, banking union. Now, I said in the beginning the solutions are in Europe. How could I possibly speak out against banking union? I'm not going to do that. But I have to say, for us, banking union is about what Maya just described. It should be about market integration. It should be about not having 27 markets with their own set of rules. It should be a market where capital liquidity can move freely. We do not have that in financial services. And it's really funny, if you look back, there were reports, Giovannini reports, 20, 30 years back in securities markets, etc. There has been hardly any progress. We have to acknowledge that. Now, banking union is on the table in Brussels, but it's not about market integration. And we have to say, as much as I'm in favor of advancing Europe and I'm in favor of completing banking union, I have to be disappointed because there's nothing really meaningful in there in terms of market integration. And I would urge policymakers to really be more ambitious and braver on that. There are other aspects in there. The third pillar of the banking union, deposit insurance. We know that is connected. All these issues on the table are somehow connected. And a number of smaller member states say we need deposit insurance in order to accept market integration. I'm not entirely sure I understand the logic, but I see that's a political necessity. There is crisis management on the table, resolution mechanism on European level that is not bringing us any benefits, and that's not going to bring any benefits to consumers. And there is a question of risk reduction on the table. I know it has been an issue where the German administration has used a lot of political capital for. I'm not too sure whether we really need much risk reduction if we do not have deposit insurance. Bottom line, and I would like to use a number that Sigurd actually calculated. You, a couple of years ago, produced a research paper which says there are 95 billion efficiency gains to be made by integrating European financial markets. 95 billion. Now is the moment to address that issue. And the good news about the Russian-Ukrainian situation is there is momentum on European level. We should use the momentum to make progress in the areas where it's most needed, and it's areas that ultimately will facilitate the situation of funding of corporates in Europe. And I guess many of the people here today represent corporates. And I really have to warn you, we are coming out of a period where funding, financing, lending has not been an issue. And if I read the science correctly, bank capital and with that bank funding will be a shortage going forward.
Sigurd, j'aimerais avoir votre avis.
I would like to get your take on this. When I hear Atig and Christian Ossig, I have the feeling that the German-French bank couple are really talking through one single mouthpiece. Good for the setup of a unique European banking sector, banking union, a single European banking union, and we're really seeing the restructuring of stock markets in Europe. To you, is this an interesting phase before the integration and before the banking union in Europe, which Madame Atig and Monsieur Ossig are actually seeking? Your microphone.
I think it's always fortunate if two strong actors do something together that will serve the wider EU interest. As long as it serves the wider EU interest, I think it does. I think also there are a number of, my perspective, purely political connections between what you want from a banking union and what actually is essential to create a common markets. And that is discussing around deposit. I think I share some of the points that you are making, Christian, and whether one then at the end of the day needs to make some compromises on things you don't really disagree with in order to get that. We'll see when it comes to that point. But the simple fact is that Europe needs larger financial institutions in a number of different segments. It can be capital markets, it can be large banking transactions, and that will not be created unless banks have a market they can serve that has sufficient critical scale for them to compete. And for me, it's not about we need to compete against the Americans. I mean, that's a kind of a schoolboy game. It's about serving the customers in Europe, and we're not able to do that unless we create banks and other financial institutions that are able to serve clients at a much more European-wide scale, in particular larger clients. So I agree completely on that part. So don't make it a contest between one continent and another continent. Just focus on what Europe needs, and it's about banking and capital market union. I also think that there is sometimes a wrong discussions of saying, well, Europe is currently using much more banking finance, where the US is using much more capital markets. I think the important thing is not necessarily what purpose does it serve that firms can also go to the capital markets and not banks, or banks not then losing business. I think that's the wrong way to think about it. I know there's also some very large French banks we had discussions with who see a role for securitization, smart securitization, not the American one, that can actually help firms getting access to funds. So I think the whole issue of how do we have an integrated financial sector, a large banking sector, a well-functioning capital markets, and sophisticated investors, pension funds, and so on and so forth, who knows how to acquire these products. So it's a whole financial ecosystem that is far too fragmented in Europe. That we need to focus on, and there are a lot of things we can do, and has been identified many times what you need to do. So it's the political will to carry that through. And if that, again, coming back to the question, can be supported by two of the largest countries in Europe pushing it ahead, so much some area.
Now, I would like us to perhaps get to this starting point, because Sigurd actually mentioned this quite a number of times, the link between the right balance and growth and stability. Now, a few minutes ago, you were referring to Basel, and you said, okay, from a technical standpoint, you explained what it was all about for those who did not know. But you also had this message. You said that this is also political a message. Now, are we getting back to the starting point and this red thread? Stability and growth. I mean, where should we draw the line? Madame Tinagli actually talked about it, and Nicolas Théry also referred to that issue. In other words, this is the very essence of our work. And insofar as Basel, as well as other issues, ignorance and fear are the worst enemies. And ignorance and fear in the prudential sector would be about the following. In other words, being very scared about those complex rules and say it's way too complicated. We're going to set it aside and rely on great experts, and calculations will be the way they are, and economy will pay. Now, I believe that the approach we got here in the bank sector and in the dialogue we're having with all of our partners is as follows. If the purpose, if the objective of the Basel Transplantation Europe is about making a carbon copy of what is being done on an international level, because rules were subject to negotiations on an international level by a circle of governors, and with a political mandate in general term defined by G20, by heads of states and governments, ministers of finance, and they said this should not actually give way to significant increase in requirements. This was the framework. Those were technical rules with a mandate, which Sigurd referred to a few minutes ago. Now, if you say, okay, transplantation, we take the Basel rules and say, okay, we make carbon copies, great, we got this in Europe, great. Now we just miss up. The balance is about saying, okay, what are the public political objectives, the public political ideas? Is to finance growth. It's the financial independence, which once again is not about having extra-European stakeholders exit, but have competitive equality. We should serve multiple markets, and it's about also not having any borders within bank groups, borders depending on countries. So actually, at the end of the day, when you're having a look at the way in which the European Commission and states and the European Parliament are going to be negotiating around those different points, we need to be highly attentive. Are they complying with the general mandate of not increasing requirements? And is it well done for each one of the countries and for each one of the banks, not on a European average level? This is important. So how should we work things out for the result to be in line with the mandate? And how should we take French specificities into account and still be faithful to the international text? But one cannot just say the objective is to actually tick all the boxes. No, the objective is to tick the growth-related boxes, competition-related boxes, stakeholder financing-related boxes, and this bank-relational-related boxes, which we cherish quite particularly. Christian Ossig was looking at me. I don't know whether he wanted to get a message across to me, but forgive me, but I can hear. I hear you. I hear you, but there are budgetary situations, and they might be different from one place to another. In the setup of the euro currency, at the time, each country signed criteria in Maastricht at the time, deficit-related criteria, debt criteria, and those criteria. Now, every year we just keep saying, okay, we're now proposing a budgetary pathway in France, for example, for 2027, and we're going to make sure, dear German friends, that we're going to be sticking to those criteria, and that we're going to be really sticking to this, because the euro robustness is at stake. So allow me this question to my aunt Christian. I would like to take advantage of his presence to ask him the question on the German side and the reaction from Sigurd. Well, we're not expressing, we're not being vocal on behalf of the entire profession. I'll really speak on my own behalf, and I'm quite familiar with those topics. The very interesting part of those processes is we started off in very simple criteria, defined at a time when we had the feeling that we were heading in a stable direction. Now, with years passing by, states' intent were not, the states did not change their minds. Circumstances have changed. And the fact that all the economists observed that life was a lot more complicated than a textbook. While we, including those structural growth-related issues that are, let me just use a very simple example, the very simple difference between Germany and France. Two differences. One is the structure of the economies, which we referred to a few minutes ago, between between the industry, services, exports, consumption, investment. Now, this changes the evaluation of a given figure. And then the issue related to demography and the evolution of active population dynamics. And this is not the same, having different debt levels, might actually entail different conclusions or generate different conclusions. So what this process shows us, this process became more and more complex. I'm talking about the process around the Stability and Growth Pact or Agreement. It shows that we need to be agile in implementing this process. We need to whistle and say, hey, raise the red flag and say, let's put this, let's stop. But we cannot really play the ostrich and ignore those complex realities. In the next panel, we'll probably be talking about the fact that with all those public financial constraints, the relationship between public financing and private financing for those major transitional challenges which we're all experiencing has to be done. This is paramount. So stability and growth rules, whether those rules exist or not. So public money will not suffice and private money will not suffice in the face of what we need to, we're going to be going through. Because Ossig, with regards to this budgetary situation, the new German Chancellor, budgetary rigor, is that what he's going to say? Or I'm going to make an effort to perhaps reprocess those German surpluses within the European system. What is the German Chancellor's position? He is really trying to drive a wedge between us.
Well, there's a strong link between the budgetary question as well as the role of banks. Why has the fiscal situation in many European countries deteriorated? To absorb the effects of the pandemic. And in my point of view, that was the right decision. Because the pandemic, we always knew it should be temporary in nature. We are not done with it, but at some point we will be done with it. The situation we are facing now is different. The war in Ukraine is not going to disappear tomorrow. Energy prices, they will be high for quite some time to come. And if we look at the disruption of supply chains, we have moved from a world where we were very happy with just-in-time delivery on global scale to just-in-case delivery, and the product just do not arrive. And that is very costly. And even more importantly, we need to finance a transition of our economy, and we need to stop climate change. That is going to cost a lot of money. That is not a temporary challenge like the pandemic. That will be with us for many years. And public funds are limited. And that is why, and that's my link to the banking sector, that's why we need now strong banks, strong capital markets, more than ever before. I see that European policymakers understand that, generically speaking. What we need now is we need to translate that into rules that allow the banking sector in Europe really to be able to respond properly to these challenges that I just described. And if I may, just one last thought, because I was thinking, I'm seeing here Nicolas Théry sitting in front of us. We spoke a lot about the European market. Nicolas has very large German operations. I've never discussed that with him, but it would be an interesting question to hear how happy he is with his economies of scale for being one of the largest German banks, or how unhappy it is because today it costs him a lot of money. There is additional complexity. He cannot move capital liquidity from Germany to France the way he would like to do. When we discuss it, it has a bit of a theoretical nature. Nicolas lives this European market or lack of European market. He is one of the largest German banks.
Sigurd, un mot juste pour conclure, et puis ensuite on va séparer le temps.
Just a word of conclusion, and then we'll stop, and we're going to go on with the second panel, the issue which was not at all a contentious debate here by well, journalists are not stakeholders, they're passive spectators watching other people's lives and trying to understand. Sigurd, your microphone.
Question. We're going from France to Germany to Denmark, so of course I'll represent both from economic perspective, maybe also policy background, the tough guys. So I made 2 years ago a very simple diagram. Where was public debt when the crisis erupted in 2008 for all European countries, and who have remained more like to remain in the same space now as in 2008? Many countries, Germany even, decreased public debt over the last 20 years. A number of other countries consistently increased public debt, and ended up including this country, in GDP ratios above 100 and some even further up. There is no way that can continue. There is no way at the end of the day that you will create a solidarity based on that these debt can be consumed and paid by someone else. So I think there is a basic issue of reforms of labor market and pension systems in these countries that need to take place, irrespectively. And if you think about it, these countries have been saved enormous amount of money by the monetary policies of the European. So some of these countries will see in 5 years' time debt serving as a share of GDP going from up with 4 or 5 percentage points. They'll be bankrupt unless they do something in the meantime. So there needs to be something taking place there. But it then goes back to the point Christian had. Given the fact that public finance will be constrained, what areas of the way the green transformation can take place should and could be delivered by the private sector, by financial institutions, combination of banks, pension funds, and so on and so forth. And there are a huge amount of investments in this space that needs to be done by the private sector and basically on market means and supported by green tax policy and so forth. So I don't think there's necessarily a lot of money needed from the public sector. It's also about being smart about the financing and the structural conditions around that, not only because that's the right way to do it, but also for the simple reason that if the countries I speak about here starts dealing with the financial questions that are in those countries, there won't be a lot of surplus spending from the state. So it needs to be financed by the private sector, and it also should be, largely.
Voilà, merci beaucoup à tous les trois, Maya Atig, à Christian Ossig et à Sigurd Næss-Schmidt. Merci beaucoup.
Merci infiniment
je pense qu'on peut vous
trois.
Parce que,
Thank you very much to all of our guests for this, to our round table panelists here. We are going to now move to the second round table with these burning questions for the future. Obviously, the economic, the environmental transition, and obviously the significant financial movement. So a couple of figures, 3 to 350 billion euros just for the ecological transition and for the digital transition as well. This is a huge amount of money for Europe as well. How are we going to fund this? How is this going to be financed? This will be the topic for the next roundtable. Thank you to our three guests.
Merci beaucoup. Voilà, je vais demander à Fabrice le Saché, vice-président, porte-parole du MEDEF, vice-président de la commission PME.
Let me ask.
Me rejoindre. Karine Kroos, la directrice exécutive de l'entreprise.
So let me ask the executive director of engagement for Carrefour. We have Monique Barbu, president of WNF France, Etienne Barrel, deputy director general of the FBF, and of course we are also very happy, very honored, very pleased to welcome by a video link as well the Secretary of State at the German Chancellery, Jörg, Kukies, in addition to Fabrice Saché, Vice President and Spokesperson for the MEDEF. So to you, Jörg, Kukies, thank you very much for being here. I was mentioning earlier the huge sums of money. What is your opinion on the need for financing and the role of banks? We heard from the economist from Copenhagen Economics a moment ago who said that public funding is not necessary a requirement. What is your opinion from Germany on how these transitions can be financed?
Hello, can you hear me and see me?
Yes.
Okay, very good. Yes, many thanks for inviting me, and of course it's a very timely question that you are asking. We were yesterday in Esbjerg, in one of the wind capitals of the world, with the prime ministers of Denmark, the Netherlands, Belgium, Germany, and the Commission president to discuss exactly this with the European industry engaged in offshore wind generation and distribution, and the sums are quite staggering. Germany alone will electrify its economy with a massive shift both to electricity generation, but of course also renewables. 80% of our electricity will be produced from renewables by 2030. We will go from currently 500 to 600 terawatt hours per year to 800 in 5 to 6 years, and 1,600 or more at the end of the 2030s. So reinforcing the grid, building the capacity is something that will need billions and billions in financing. And the consensus yesterday at the North Sea Wind Summit with the 4 prime ministers and the Commission president was exactly as you quoted before. The bulk of that financing will be done by the private sector. That was consensus both between the CEOs who were present and the heads of government. So in that sense, I think it's exactly now the question how and who in the private sector will provide that financing. Because of course this question of build out that I just mentioned for offshore wind will continue in many other areas, for onshore, for photovoltaics, for then thinking about storage in terms of batteries, green hydrogen, and many of these elements. So this is something that, of course, in Germany we will push forward massively in our quest to become climate neutral by 2045. And of course, the task of undoing what we did for 250 years in terms of consumption of fossil energy needing to be revised in 25 years is a quite awesome task. And of course, the other big topic that has come up over the past few months due to the Russian invasion of Ukraine is that we are not only linearly going from fossil fuel consumption to renewables, but we're also sidestepping and doing an interim step of fossil Russian fuels to fossil non-Russian fuels. Because, of course, we've politically decided whether we succeed with sanctions regime at the European level or not to exit the consumption of Russian coal, oil, and gas. Coal were already going out and will be finally done by August, oil by the end of the year, and gas, of course, a much more complicated question, but the target is also to go down to zero by 2024. So all of that, of course, will require quite a large amount of infrastructure build. It will require some infrastructure build in fossils. President von der Leyen mentioned that in Repower EU yesterday, although it seems counterintuitive to the Green Deal. Things like the TAL pipeline will have to be reinforced. We will have to build LNG terminals in massive scale. We'll have to build pipelines. The positive news is all of this infrastructure build to replace Russian gas.
Est-ce que je peux me permettre
Apologies, Secretary of State. Allow me to interrupt you just for a moment to ask you another question. You were talking obviously about renewable energies, and we know just how important they are in the economic transition. You were talking about wind energy. We have a major project to develop offshore wind here in France, but you haven't mentioned photovoltaics. You could also talk about wave energy, or also nuclear. In France, nuclear is still a major source, even though it's falling. Is nuclear completely out of the picture for the economic transition from your perspective?
Well, Germany, as you know, has taken a different path than our friends and colleagues in France. The amount of nuclear power generating capacity that we have left is only 4.3 gigawatts. That is a small fraction of our installed capacity. The political consensus is to exit. And from the expertise that we have now out of the ministries responsible, extending the life of the 3 nuclear reactors that we still have online would be quite costly and very intensive. And then, of course, there's the question of levelized cost of energy, where a lot of our experts and companies are telling us that even in countries that have a very pro-nuclear legal infrastructure and public consensus, the cost of producing nuclear is actually vastly higher than the cost of producing renewable energy through wind, solar, and other means. So in that sense, we are more in the camp of diversifying sources. Of course, the question of capacity when the wind is not blowing and the sun isn't shining is a key one. Hence the question of storage. But there will be different approaches on this.
Alors, j'aimerais qu'on donne la parole aussi à nos invités.
Thank you very much. I would please stay online with us, Secretary of State. I'll move now to our other speakers. We have heard a lot about the crisis. We have a representative here from the Carrefour Group. Before we hear from the WWF, from Monique Barbu on behalf of the WWF, how are you preparing companies? We don't just have large businesses. So how is the MEDEF preparing its members to this transition and to what is happening? Well, first of all, the transitions that you mentioned, the energy and environmental transitions are a question of innovation and obviously of financing. So what does this mean? Well, you need access to finance. And in order to have access to finance, well, these costs have to be competitive. Why? Because there is a global competition. This is happening. A subject that we are interested in is looking at the short, medium and long term. During the presidential campaign, there was a lot of talk about moving to a zero carbon policy. France is reducing its carbon used by 2% every year. It's not enough, of course, but we're doing very, very well compared to others. How do we do better? Really, this is the question. We have tried to look at this objectively. We commissioned a report from Rexkov, and MEDEF was involved in this. This was submitted to the French authorities a few days ago, and the report is very clear. If we want to reach carbon neutrality, we will need to have an investment chunk of 3 to 40 billion euros per year, in addition to a business-as-usual scenario. That is for businesses and companies. For individuals, it's 20% higher than that. And obviously for private individuals, for households, they can do this. They can reduce their operating costs by insulating their houses, double glazing, and so on. It's not quite the same for business. And so how do we go about it? Well, we have some thoughts about, some ideas. We could reinvent the wheel. We could reduce. We could cut taxes. And this would match, in fact, the increase that is required to make up loss. And in terms of banking, there are a few things. Firstly, we must avoid a banking collapse. We must avoid more banks collapsing. When banks go bankrupt, this is an issue for the real economy. It's a problem for companies. And the fact that there is regulation, if it is reasonable, if it is proportionate, and if it is arrived at in agreement with the industry, it's not necessarily a bad thing. But now, if you are evicting things from the real economy by over-evaluating, over-assessing, or overstating the risk, and this, I think, can be stated with reference to today, Basel III. I know that there are lots of experts here, but Basel III has been structured on some aspects according to we could say, North American model. And so downstream there are issues with the credit market, the housing loan, the mortgage market. The way we look at the solvability of individuals is rather different. And so if we don't distinguish between how we do this here and in the US, where you have this eviction rate of what is going on in the US, and you're less likely to get a loan. And 60% of countries are not rated. So here means bad rated when you don't have a rating at all. These small SMEs and very small companies, they need access to finance. We talk a lot about the trade deficits, and this impacts exports. There are real issues, the technical issues, these so-called bad debts that are underwritten by public or private entities have to be taken into account and have to be included in this prudential ratio, basically saying that we have to have more capital in reserve, which again means less money to finance and going to companies. And so basically the underlying philosophy of taking capital away and draining it towards low carbon solutions, it's a good idea in principle, but there's this issue of best in class. And what we're actually going to do is focus all of the funding on the best solution. So if we look at this clearly, we don't really have the answer yet. And if we work closely with the banking sector to advocate for different ideas that may not be exactly the same, but are very, very similar in many, many ways. I think this is really interesting. Let's hear from the Carrefour Group. You previously, I think, were working for Veolia. And these are topics that you are very, very familiar with. Tell us about how Carrefour, this major distribution consumer goods company, how are you thinking about this green transition?
Bonjour.
Yes, good morning. Well, how are we approaching this? Well, we're trying to identify the different impacts of this transition, how we are going to be impacted. This sometimes requires financing, but sometimes we actually also create value. We create customers and so on. And so the first impact, I think, is on our products. We are distributors and we sell products that are impacted by the green transition. I'm sure you've all seen the organic. We're leaders in organic. Also plant proteins. That is another area where we are quite strong. This is part of the green transition where we're very strong. If you can anticipate the trends, you can put yourself in a strong position and create value. Obviously, there's also an issue for our employees. We were talking also about the digital revolution. We have 300,000 employees, and we're going to be training all of our staff in the digital transition, 100,000 every year over a period of 3 years. And this green revolution for us, I mean, obviously we have to explain this to our customers as well. Act for Food is the name of our program, what it means for us. If we are able to put in place a more virtuous eating habits, if you like, to everybody, this is what it means for us. So we've looked at the products, the employees, and also the stores, sort of our infrastructure compared to other businesses, if you like. And so we are facing the same issues. Perhaps the carbon neutrality and biodiversity, of course, is very important to us. And we will be very neutral in terms of e-commerce as well, logistics, data centers. That is also produces a lot of greenhouse gases in other areas as well. So all of these things, I mean, that this is going to totally change, the green revolution is going to totally change the way we do business, the way we go about things, including our discussions with banks. Now we talk about full full CSR, corporate social responsibility, and it changes actually all aspects of governance and how we operate. We need to change the way that we address others. I am a director of engagement. This is a new creation. We also have a chief impact officer. Sorry, it's the same role as the chief impact officer, as we say. And this is about diversity, inclusion, solidarity, the employer brand, because recruitment is also an issue. So engagement is really about taking position. So actually you are recruiting at the moment, and you are recruiting in the metaverse. With Alexandre Bompard is fully behind this. So a question for you now, before we hear from Monique Barbu, who we're very, very pleased to have with us on behalf of the WEF. So you have, like any company, you have staff who have been with you, who have a certain age, and others who are younger, others who are older. So what happens with the younger employees? I'm not trying to stigmatize them in any way, but those who are younger than me, are they more sensitive to the green transition and also better at the digital transition as well than the older ones, for instance, those, say, my age? Well, we do not believe that this is the case. This is perhaps a little bit of a visible phenomenon, but I think also the older employees are sometimes affected by the perspective of their children, who can sometimes be more aware. And so we have these superheroes, this ambassador system for those who are really, really involved and committed to CSR issues across the group. And this is something that we've created. And governance tools, I think lots of things are changing. The way that we are financing ourselves is also changing. We are finding green finance. In fact, this is we have created a sustainability-linked bond for the first time, and it worked really well. That was launched in March. Several billion euros raised in this way, and recycling plastics in store. If we don't achieve our indicators, the yields will be lower. So there is an element of risk attached to it. Now, a lot of our executive teams are linked to have their pay linked to this. So there's real motivation behind it. But obviously, we have to work with other stakeholders as well. Monique Barbu, I am very interested, of course, in hearing the voice of the MEDEF. I've heard from them and also from companies, the impact head of impact at Carrefour. So I'm now interested, Monique, in your view. How do you feel? What is your reaction when you hear, obviously, companies tell us about their plans? And then we will look at how other companies are reacting from Tinagli. Thank you very much. Thank you for the opportunity to speak to you all today. Obviously, Carrefour is one example. They are very close to being the best in class on many of these issues. It is true. But I myself am extremely attuned to the fact that economic activity in France is not limited to very, very large corporates, large companies. And we have to consider how the entirety of the French economy is going to be impacted by these issues. I must say that I'm a little bit troubled by your way of presenting things, namely by saying the environmental transition represents a cost. It is not a cost. I'm sorry. It is an investment. It's, for instance, the drought that we are headed for this year. If you look at the cost of flooding, for instance, as it can clearly be seen by a number of insurers, for instance. This is directly linked to climate change. And working on the green transition, the ecological transition, actually represents an investment and economic opportunity. Why is it that we say today that the energy transition is going to be financed via the private sector, via banks? Well, the reason is because, yes, energy, yes, there is an investment cost, but there are customers who are going to be paying for these energy additions. And then there are other opportunities that will be created, that will arise thanks to this green transition. Of course, we have to get to a position where we bring up the rest of the economy to this level and rise to the challenge. And of course, the banks must do so. We talked earlier about the matters of risk. As we try to get a better understanding of the risks and also of the opportunities, we will see that markets will be created thanks to better consideration for environmental issues. Well, yes, this is clearly something. The sooner we get out of the climate change cycle, the less costly it will be for everyone, even for our children who want to live in a healthy world and to be healthy themselves. Yes, everything depends on mobilizing the banks. The role of banks is to immediately give business money to that so they can immediately invest it and then stretch this out over time the way that it is reimbursed, and so to allow everyone to get on board with this transition as quickly as possible, even though it is a transition that is going to take time. And so I completely agree with Monique. Banks must get on board as this tool in order to help their customers. I think financing is just one of the pillars. I think the first thing we have to do is to actually listen. We must listen to our customers. We must listen to our stakeholders. This is the strength that we have in a relationship-based model, an interpersonal model. We are in the territories with individual clients, with private individuals, with NGOs, with corporates, businesses, small and large alike. We need to understand their needs, and this is our role. Secondly, once we've listened to them, we must enlighten our customers. We must tell them about where they are in relation to the overall sector, what the trajectory looks like. Is this a viable one? Are they on the right path? Have they started down it, or are they very far from their goals? That is the second contribution that banking can make. And then thirdly, financing. This is, of course, essential. We are very, very committed to this because we have an extremely important role in terms of ensuring this transition actually takes place and is successful. These huge figures, 350 billion euros per year. These are European Central Bank figures, 350 billion. A quick rule of thumb, actually, in the last 10 years, the increase in balance sheets of banks in terms of the environment, we have financed roughly 500 billion in Europe additionally. So if we have 500 billion that doesn't come from business as usual, as Fabrice was saying, but this is on top of, this comes in replacement of things that are absolutely urgent, that have to be replaced. Well, this is a matter of urgency. Everyone has to get on board with this, and we have to move very quickly. We're extremely committed to moving quickly here. Excellent. Well, right, before we get back to the Secretary of State from the German Chancellery, I would like to come back to what you said, Monique Barbu. There are major groups. Sorry, Ken. There are big companies. There are small companies. You have a background in entrepreneurship with Veolia before coming to Carrefour. So do we have time? Are we really falling so far behind in France in terms of the energy transition? But Madame Barbu, well, where are we? How are we doing in France? This is a major major importance. Carrefour is not alone. We are part of an ecosystem. We have suppliers, we have partners, we have a whole set of tools. We have lots of different people and entities around us. We have created 20 megatons, the objective being to reduce our greenhouse gas emissions by 20 megatons. So that's for major distribution companies like ours. But can you impose this transition on your suppliers? Well, as I was saying, Carrefour is not alone. We're working with the SMEs who are suppliers. We also have a stream who have a special label, and these are green. I'm sure you're familiar with this. These are ecology, agroeconomic labels, and so we're able to bring people over to these greener methods of food production. So if we don't push and go for CSR, that's all very well and good to do that, but society must be behind it as well. I think everybody, as we were saying earlier, we can also create value. There are so many examples that we have where actually CSR, when it's implemented properly, really creates value, and that really changes things in terms of bringing society and people along with you. People are really happy with that, and I don't want to go on for this too long. But you said, Monique Barbu, there is an ecosystem that has its own value. There's a big group like Carrefour, and actually what they can do is they can bring their suppliers along with them. Fabrice, Monique Barbu, are you convinced by this approach? Well, this approach does seem very appealing when described like that. I, perhaps in a previous life, have also seen a number of perhaps unforeseen negative impacts of this. For instance, companies that take very strong steps in this direction and who force certain conditions on their suppliers. I'm thinking perhaps of suppliers in developing countries who are simply not able to keep up with these kinds of rules. And so both of these things together, if we are imposing these kinds of rules or requirements on suppliers, the company must follow through, which means they have to accompany people and support their suppliers through this transition, rather than simply excluding from the ecosystem or from their market because they're not able to keep up. I saw this a lot in my previous career in countries of the global south, and this is really something that we must be extremely vigilant about, and I am sure that many NGOs will be keeping a very close eye on how this runs, because we should certainly do not want to see eviction of our economic fabric.
Fabrice Saché, oui.
Fabrice Le Saché, will come back to you, Jörg Kukies, in a minute, but Fabrice telling your consumers, your customers, look, I'm greening my production, but not going to check really what's happening in the places that were used to be called lesser developed countries. If you don't go there and check and see really what's going on, I mean, what does it really mean? Is this really ecological? I'm really not very good at classifying different companies.
Because we realize that some SMEs have 100% transitional business models and other budding companies that popped up 2 years ago. So I don't think we should focus on the size of the company. But there is a reality, and this is what's really important to me in this panel, the ability, companies' ability to sponge in some financing financing and have available money with banks. And I'm really sorry for being overly focused on this. Now, a lot of managers have this will of focusing on decarbonization measures, and they consider this as a breeding ground for enhanced opportunities. 60% of available technologies to reach carbon neutrality, according to McKinsey, exist, but the business plan is not really up to snuff. And part of the business model is massification. We have to increase our scale and financing. Once again, I'm hammering this home. In our country, if we need colossal financing, public schemes, and so on and so forth, no. I mean, they might be useful because in major ArcelorMittal, Dunkirk places, 400 million are actually supported with the subsidies. Let's put it this way. So as to electrify high furnaces, and we know where major mission centers are located in France, and some work is done here. But the banking sector, which really has the ability to do so, but for that purpose, there has to be standards in Europe, because this is high time. We need to do this now, June and November, according to my figures. 40 to 50 billion euros for the translation of Basel III as done today. With the leverage effect, let's not forget about it. If you consider this 7 to 8 times, this is colossal on a European level. And you were also 70 billion. Okay. Anyway, this has an impact on cash invested by companies to finance ecological transition in France. In France, I mean, this is the situation with the leverage effect. So we're not really talking about, this is no cinch. I mean, this is not trivial. We're talking about a colossal thing. So diligence and reporting are necessary, and I'm sure that turning SMEs into administrative bodies, well, qualitative studies were made because they need to hire auditors and carry out carbon studies and fill out questionnaires and do reporting. Now, you're talking about major groups and SMEs. There's a genuine difference with human capacity and the standardization of data. And all this comes with a price tag, a heavy price tag. With SMEs, we had made the proposal in the COVID crisis, a green public mechanism, but we need easily identified SME mechanisms targeted on those very specific issues, and there is a will in this dimension, but we need to have access to the financing. Jörg, State Secretary of the German Chancellery, I hope you're still with us. Thank you very much for being with us. I wanted to ask you two questions, Mr. Secretary of State. The first one, with all those regulations and how is financing possible? We're talking about heavy investments, heavy investments in ecological and digital transitions. And Mr. Secretary of State, now, despite the Germans' budgetary situation, how do you foresee this combination between banks and the public sector?
Yes, we are of course looking very carefully at some of the regulation changes that will affect the potential investors into the transition of our economy, namely banks and insurance companies. In both, we are following the Basel III and Solvency II discussions very, very closely. There was an initiative when I was still in the finance ministry between the German and French finance ministry on Basel III. I think that was to a large extent taken on board by the Commission in its legislative proposals. So what we are hearing from banks, asset managers, insurance companies, and pension funds, that they are very keen to engage with us in investing into the renewable transition of our economy. The topic of ESG is very popular among investors, and certainly what we are doing with renewable energies goes directly into that direction. The EU taxonomy has been very clear that the only truly green sources of energy are the renewables. So in that sense, that's an area where regulation is actually helping. We are still pushing in the context of the Green Deal that, for example, on the the international projects of common European interest. The green hydrogen is promoted even more in all of the competition law things. We need to take into account that in some areas of alternative production, especially storage, the economic viability is not yet reached. So we have to find a model similar to what we've all achieved in wind, where initially the government has to provide subsidies, but those melt down. And as we're seeing in some wind projects that we saw live in action in the Danish North Sea yesterday, actually no subsidies are required anymore, and the private sector finances those completely autonomously without any kind of state aid. For hydrogen, we're not there yet, and we are relying on the Commission to be very fast in setting the framework to promote hydrogen investments, especially into green hydrogen.
Mm-hmm. Etienne Barrel,
with regards to the financing of ecological and digital transitions banks, French banks, do they have the right weapons? Are they well positioned and braced for those, despite the various regulations? Are going to be up to something? They're going to outperform their duties. French banks want to be the leaders. They want to position themselves as leading stakeholders in this transitional process, and I believe they are. And we are going to be talking about the interaction with regulations, but the mindset is to be a leader. Why? Because, as already described, the French ecosystem is such that leadership is important in this transitional process, and we need to support this by being at this position already. And we can actually provide some evidence, and the evidence is very simple. French banks were the first ones to exit some of the sectors which were not part of that transitional sector. They decided to exit the carbon financing sector. And they said several years ago that they would no longer finance any thermal carbon mining and processing. And year after year, evaluations are being made because engagements need to be made. How much money is being left in those portfolios? 2.5 billion 5 years, or 1.2 billion 2 years ago. We'll see this year very low amounts, and we'll reach 0.0. And then what type of additional energy will be put on the table? An energy that will be part of that transitional process. The greenest, for example, renewable energies. What's the situation today? Secretary of State Kukies talked about it. We are in the leading position in Europe and France. And so forth, the financing of renewable energies, regardless of where you're talking in Europe, we're no longer about 2 billion, 40 billion per annum financed by French banks, and this is not going down, it's actually rapidly going up, and between 15 to 20% increase per annum. Now, I believe that this is a very important leading position. Forgive me, but I was just thinking of ex post facto. We're talking about renewable energies and photovoltaic energies and wind, but by definition, those techniques are imported. Those are things we buy. Photovoltaics will are bought. Panels come from China. The Secretary of State talked about the wind energy because this comes from Germany. But this also increases the trade balance deficit. Now, you as a banker. Of course, being a leader in those renewable energies, but at the same time, bear in mind that in some way or another, because right now we do not have those techniques in France, bear in mind that this is a problem to the French economy. Our role is, we've got a dual cap here. Number one, we need to help companies, French companies and European companies, to be stronger and more competitive. And this is quite essential just to be able to really benefit from that important industrial base. This is an important component of competitiveness. In other words, cost, the quantitative aspects, the financing aspects are important, and this is quite paramount, and we need to provide this because regulations should help us being provided with those components. We need to be agnostic as well as to where things come from and make sure that this transition is materialized. And there's an important triangle here between banks on the one hand, clients on the other, and public authorities. And the role of public authorities is extremely important in this transition. And that's why I'd like to see this opportunity and talk about this. This triangle has to be up and running, and each one should actually be up to scratch here. Public authorities have a political mandate, for example, and they need to shed light on the various choices and perhaps dictate the standard and decide what is allowed and not allowed. And banks need to challenge our clients, if not public authorities, but we cannot just be set aside. And so far as the ecological transition, I'm sorry, I'll get back to this, and with the same type of question I asked, but renewable energies, great. Less CO2, okay, so much the better. Decarbonization, so much the better. Okay, this is the perfect world in the greatest of all worlds. But those techniques are being imported, so we're also destroying some jobs before we create jobs with this ecological transition. Yes or no? Well, it's not that accurate statement, and I remember that some years back, France, for example, and so forth, photovoltaic sectors had quite a number of companies ahead of the game, but the Minitel was also created, if you remember. Yes. So what I mean here is that, once again, this is an opportunity. So investments and jobs that are going to be destroyed, but other jobs are going to be created. Absolutely. You were referring to wind, for example. I think, I think of the German companies with a French technology, Vernier, for example. So this also exists. What does that mean? Well, that means that we're going to be putting more money on those types of companies today than was done in the past. And as an aside, the nuclear sector was some type of an eviction of all those energy utilities. Well, that's a way of seeing things. Eviction or independence, perhaps. Okay, but
pourquoi n'y a-t-il pas d'énergie?
Parce que l'énergie a tout blasté, enfin si j'ose dire.
Well, because the energy blasted it all out and stymied the development of other types of energies. Fabrice, you don't agree with us. I'm not finished. I'm sorry.
Je voulais quand même.
I also wanted to, now with respect to banks, I wanted to make the following point. True.
Dans notre analyse.
The way we see things in the aftermath of the Paris Agreement, so Paris was holding a leading position on a worldwide basis in quite a number of things. I'm also taking note of the fact that all the French banks joined the Net Zero Alliance, Net Zero Banking Alliance, and the Glasgow contraption, Neutral Financial Alliance. Okay. Which means no financing by the year 2050. I'm talking about the financing of fossil energy sources. Now, let me just say, well, I'd like to take this opportunity. This is very important. Forgive me. Okay, in a nutshell. Just to say that you got the rules, but you also have banks' forceful initiatives and corporate initiatives, and they're important because they're worldwide, international. The Net Zero Banking Alliance is now, we're talking about dozens of banks, not far from 100 banks in the world that are engaged to be neutral by 2050. But neutral by 2050 is not just neutral by 2050, but what we're going to be doing in 2025, what we're going to be doing in 2030, and what are you going to be doing right now just to reach that position. This is important.
Tout ça, c'est juste.
Okay, this is good, right? And it has to be
remarqué. Et
acknowledged, and
effectivement bien de voir des engagements.
It's all very nice to see initiatives, such great initiatives, but we're really taking note of the fact that today banks are indicating, but we have no common methodology. We don't really know exactly how they all do their calculus, and
ça peut être calculé.
This can be calculated very differently from one place to another. Number two, we're also taking note of the fact that despite all this.
Le financement des énergies fossiles.
The financing of fossil energies, okay, on a worldwide basis. Let's take that into consideration. 4 of the most important French banks are among the 30 greatest financial institutions of fossil energy since the Paris Agreement, and have been so since the Paris Agreement. Okay, on the one hand, you no longer have any carbon, you don't finance carbon, but this does not mean that all of the fossil energies have been phased out or out of this financial scheme. And we're now expecting this from banks. We're expecting a more important engagement in this sector. And we're also expecting banks to
qu'il n'y ait pas simplement, si vous voulez, que la question
not just focus on the financing of energy sources, but also other types of business activities. The cement industry, the steel industry, the automotive industry, and
avoir des engagements.
We'd like to get engagements and
c'est clair. Étienne Barrel, peut-être un mot.
And pathways. Étienne Barrel, perhaps a few words. Two very important components need to be mentioned. Methodology is one of them, and the sector, business sector, is the other component beyond energy, outside of the energy, and both are connected with one another. And banks need to play a very important role in those, so far as methodology is concerned. As a company today, you're not going to be trading up and tell your bank, oh, I calculated my turnover using this methodology because this is how I do things, and the other is going to be turning up, okay, I'm going to be calculating it this other way. You only have one single methodology, one single set of data, and it works very well. We need to reach the same thing insofar as the extra financial items. And we're working with all the banks in common so as to define which methodology we're going to be picking out for photovoltaic and how CO2
entraîne des missions.
How much emission it generates and the trajectory. In other words,
pour dire que c'est le réveil et qu'il n'y a plus beaucoup.
Oh, so this is the alarm clock, just which tells me they have very little time before carbon neutrality. So this trajectory, just to make a long story short, it's very important to have the same starting data, the same indicators, and the most emissive sectors, emission generating sectors. And with the Net Zero Banking Alliance, we should define those most emission generating sectors, and companies should stick to the trajectories as to really reach that carbon neutrality. Cement, the construction industry, the automotive, mobility sector, energy. All this is covered. All those are covered, and it's very important to really focus on homogeneous data and have banks there to really support us in dealing with them the same way. Got a few minutes. Let's talk about digital transition, because we've been talking about ecological transition. Now, this is very important, of course, but digital transition, I mean, quite a number of people are engaged in this. Karine, at Carrefour, for example, you were referring to 300,000 employees worldwide, right?
Oui, monde.
That are quite aware and trained in this respect in terms of digital transition. Are those external training schemes, awareness campaigns? Well, they're going to be taking place very soon. And just to get back to green finance and to green transition, digital can really help us out quite tremendously with the blockchain. We're trying to identify our raw materials. For example, if you buy organic cotton at Carrefour, you can scan and see where it was produced. So we consider this as a green revolution, as a highly central matter within the company. And let me get back. I'm sorry, I'm shying away from the digital dimension, but with the ecosystem, we don't really consider this. I mean, we don't realize how much it is favorable to the ecosystem. We talked about public authorities, and the tax law was no cinch. Not a lot of European countries or other countries scratch their heads about the use of a company and the fundamental purpose we also have quite a number of corporates like Carrefour and others. L'Oréal is another one. Really, they're braced for battle. I'm a former Veolia person. And those people supporting us at Veolia and Suez were the two champions in terms of ecological transition. Well, there are only one now, Bill. You have the new Suez, but ours is a rare ecosystem with so many people thinking about the green transition with the ups and downs, of course, and things are not moving fast enough. But this is something that has to be underscored. MEDEF, digital transition. I'd like to get back to the nuclear dimension here, but there is a link with digital transition. There is a link because 5G, which is now being deployed, now on that platform. Yesterday, we had a general from cybersecurity general said that there were 4,000 to 5,000 interactions per day with connected objects and our watches and our telephones, and all this is generating a colossal demand consumption demand. I'm getting back to the nuclear dimension because this is quite relevant. It's quite a pivotal dimension. And in June, an act is going to go through Parliament. I think it can be said there is a battle so as to integrate the nuclear energy in the taxonomy. This is a methodological issue. If you want to be successful in decarbonization, you cannot be ideological. You have to choose the best technology, available technologies, and I cannot let people say that the nuclear sector is something which we invested a lot in. There was sub-investments, chronic sub-investments took place in France, so we decided to reinvest, which we supported quite strongly. Why? Because expertise was being lost in France. Let me just remind you that 200,000 industrial jobs in the nuclear dimension. I was referring to Dunkirk. We're not going to be electrifying high furnaces with wind energies in the company. We're also having offshore wind parks. That's very nice. But what happens when you close down nuclear power plants? We've got the German example right next door. The CO2 emission factor in France is 10 times less important than in Germany. 10 times less important than in Germany. But the waste reprocessing now. We're talking about decarbonization. Yes, you're right. But we need to talk about the objective, which is the emergency. But Dominique Fabrice, perhaps by developing a high-quality nuclear park, we shouldn't actually put a hair on our chest with. In France, perhaps we sub-invested, underinvested. I was saying we were importing photovoltaic energy sources. We're importing wind. We're not really that great so far as ocean energy. Perhaps we underestimated the necessary investments in those renewable energies, contrary to Germans that embraced those quite early on. But they increased their CO2 emission levels. Okay, I'm just going to take 1 minute. We're actually shifting from one dependence to the other, where we pace things up so much. We're not against renewable energies, but we open ourselves to gas and we see the results there. So we need to leave each one of the country follow their own trajectory. Okay, let's actually put this ecological transition to a halt. But you were talking about digital transition. Just a few words, because we're talking about digital deserts. In France, it's nice to talk about digital transitions. 125 billion euros per annum in Europe. This is to guarantee this digital transition. But let's also talk about our country here. You're talking. They're the head of WWF, France. Okay, as far as we're concerned, this is really paramount. That digital transition, is paramount. Why? Because we can talk about ecological transition and not just talking about energy transition. So other sectors are in the loop here. The radar screen, and data are important, and they play an important role here. I'm thinking of deforestation. And a European bill is going to be issued very soon insofar as imported deforestation. And obviously, how can we follow this kind of process if we don't have reliable satellite-based data? Digitalized data for each and everyone to be aware of
des terres qu'on veut
the scope of those
d'importation
lands that need to be frozen in the import business, to identify frauds and try to analyze all those data.
Quelque part,
in some ways, if
intégrer de
our objective is to drill down, integrate environmental issues and biodiversity-related issues in a refined way, and integrate those in the studies that we are going to be performing. Those are going to have to be associated with a digital revolution and digital economy. Just a few words on data. Fabrice, this is an issue.
À répondre à la question, mais parce que la question des données
intéresse. Data, this is of interest to companies, and MEDEF, data, digital ecological transitional data, this is a genuine issue, yes, because data can be commoditized. There's a regulation attached to them. We use data to get a better knowledge of our customers and sell products and services, but this is a general statement which I'm putting forward now. And so far as data are concerned, we need to really talk about dosage balance. We understand we need to protect consumers and personal data, but with artificial intelligence, and some countries are really well into it, but we don't want to have as few regulations as they do, but we need to have important data, important volumes of data, be able to process data, and try to really strike out a balance between flexibility and regulations. So, how about ethical matters? Yes, ethical matters are important, and in France we have governmental or national agencies, and sometimes things are complicated. And a very specific example with the COVID crisis, one of the proposals we had made was to send text messages via private telephone companies, and this was impossible because we were told, okay, data protection complexity, whereas we're really living a very complex period, and this action for the uploading of the anti-COVID application was just common sense. So there's a tension between regulations and the will to really make rapid headway. Monsieur Barret, just a few words on data and how banks approach this matter. I believe that banks are now approaching this as being an essential challenge so as to really foster good dialogues with their customers. Let me get back to the situation in the financial sector when banks need, well, for example, if they need to make a decision on a credit to identify their customers' health level, the financial data exchange is quite flawless, and another pathway is not that flawless, and clients, corporate clients are quite familiar with this.
Know your customer,
the KYC, know your customer process, which is somewhat complicated because we haven't really standardized and well-defined this, and banks are asking for the same thing 4 times, depending on the format, and I'm sure that Fabrice or Karine know what I'm talking about. We should not be trapped into this. With an immediate emergency, we're going to be trying to solve this right away. We often forget about the urbanization, the process, the industrialization process, which is quite crucial because tomorrow we will need the extra financial data as well as we need financial data, and as a result we'll need to define the way for clients. It's going to be very simple, very flawless, and for banks we'll be able to really support them as best we can. To conclude the panel, I'd like to get back to Mr. Kukies, who's live with us. Mr. Secretary of State, just one question. You were saying that Germany had embraced, Germany had embraced new renewable energies very, very early, so you've been ahead of the game. Is that good or bad for Germany to embrace the green energy?
Là, on vous entend pas, donc la réponse.
We cannot hear you. We cannot hear you.
Est-ce que vous m'entendez,
Can you hear me?
Est-ce que vous pouvez reprendre?
Mr. Secretary of State, can you actually reiterate? Thank you very much.
Je vais recommencer.
Okay, I'll repeat.
So I don't think renewable energy has a party color. It is green, yes. So we're happy that this is now being built out, and it's built out in great consensus, by the way, in all political parties in Germany, with one exception on the extreme right. So in that sense, I think it's something that also our industry completely supports. There's a 230-page study by the German equivalent of MEDEF, the German Federation of Industry, which also traces that the public sector and the private sector are going in lockstep on these issues. So I think it's something that that has a broad consensus. I just wanted to say one word on digital very quickly, because I do think this is a great project of common interest between Germany and France. Commissioner Breton has launched the CHIPS Act. It's extremely important in semiconductors that we digitize. It's an extremely enormously important strategic asset. We're very happy that Intel is investing 33 billion just 1 month after the CHIPS Act was launched, and the vast bulk of that is going to Germany and France. So this is an element of the digitization in addition to everything we're doing in startups together. I think it's also worth mentioning that Economics Minister Bruno Le Maire and German Finance Minister Christian Lindner signed an agreement that we will work very closely together to promote startups in general and fintechs in particular. So, l'amitié franco-allemande fonctionne au secteur.
The French and German friendship is definitely working in this regard. Thank you, Mrs. Secretary of State. Thank you to all of our panelists. We are going to move to the final discussion of today's conference, and I will ask Nicolas Théry, President of the French Banking Federation, to come and join me here on this stage. And we will also be hearing from European Commissioner from Brussels for the Financial Committee, Mairead McGuinness. Can you hear me? Are you with us via video link? Mairead McGuinness, I think we will be connected in just a couple of seconds. President, please, do you have a seat? So I hope that Ms. McGuinness, European Commissioner for Financial Services, who will allow us to help us close this roundtable. I don't know if you can hear me. Madam McGuinness, are you connected? Are we online? Well, we'll perhaps start with Nicolas Théry first, then. Yes, that's fine. What did you think about this discussion, except for the enormously high caliber of the discussion? Well, I think it really did answer the questions of the choices that have to be made. We must highlight the fact that that the banking sector does not necessarily have deep pockets. It's really an expression of collective choices. And really, I would like to begin with this point, because I think in both the round tables we talked a lot about how to serve growth, how to support the green digital transitions. And we see each time it is a matter of mobilizing an entire ecosystem. And I think a sector-based approach, you may find this a little bit odd that the president of a sector, a federation of a sector, should say this, but I think the banking sector is fundamentally an auxiliary of public policy, of monetary policy. I mean, of course, there's lots of things in between, lots of cogs in between, and lots of great leaders and so on. But ultimately, it is an auxiliary of monetary policy, and we are just a lever for transfer of the monetary policy and transferring credit loans and so on. So these definitions that define us, this includes the challenges and the stakes. So first thing we have to say, obviously today we're talking about planning for the green transition, we're talking about green planning and also investment, planning investment for growth. So what is the role of the banking sector in this planning? I think our history here is very interesting. Obviously, we're not going to be able to plan the economy. Well, we have a real obligation to plan for this. Well, yes, absolutely. And once we have taken into account the prudential issues, the issue of prudential regulation, So once that has, we have to decide, are we going to support this through those rules or not? I think we do now have a connection with Mairead McGuinness. Good afternoon, Commissioner. Thank you very much for being with us here on the FVF conference. We've talked a lot about the transitions, the recent crises, also Ukraine, the health crisis. For you, Madam Commissioner, do you think that this reinforces the need for European sovereignty in this area, in the banking sector? And I used a concept earlier, which is that of financial autonomy compared to other economic zones. Is this something you can take on board?
Well, good afternoon. And yes, I'm live with you from Brussels and happy to join. There's a few points. I don't think that Europe ever will talk about closing off to the rest of the world. So we talk about open strategic autonomy. But we've learned lessons, not only in this terrible time of war, but previously with the health crisis, that we were vulnerable in some areas of supply chain. And in fact, that was obvious before COVID hit. And therefore, we had to take action on the health part of our societal agenda. And we did good work there when we were united and strong and collectively worked on vaccines, etc. We now need to look at other issues. And you've been discussing energy. I was able to eavesdrop on the conversation. So we're very developed, but we're very vulnerable. And on energy, we are taking huge steps. Yesterday, you saw the announcements here in the Commission around our efforts to diversify, more efficiency, and particularly ramp up investment in renewables. But our financial system, in my view, is the backbone of the entire economy. We need a strong, resilient financial system to meet the challenges of today and tomorrow. But there's good pieces to be said about banks, and I think some comments already made. We came through a horrible financial crisis. We regulated effectively, and that stood the test of COVID because our banks were strong and resilient and were available and able to channel public money towards sectors and individuals where support was being given. We're concerned about non-performing loans, and it's obviously something we continue to watch. But to the credit of the banking system in Europe, it was part of the solution around COVID. But we all know that our banking system is changing rapidly, indeed, because of COVID and digitalisation and the arrival of fintechs, large and small. So we want a resilient financial system. Even with the change, we need innovation. We have to support innovation, but equally be aware where there might be risks.
Madame la Commissaire, je voulais également vous poser
Madam Commissioner, I would like to ask you another question, which was the subject of our debate here this morning in Paris. We talked about the prudential ratios, and we took the example of the most well-known of these, Basel III, as it's known. For you, do these financial ratios, do these help banks in Europe invest? We were speaking earlier with an economist. When Europe is in difficulty, are these prudential ratios a hindrance to the possibility of European banks to invest?
It's important to remember that these are international standards, and Europe is part of that process of making sure that there is an international standard that we apply. There was a huge amount of debate in the run-up to our proposal around Basel. Really concerns around the points that you make as to whether this might impact in a negative way the capacity of banks to continue to lend. So I'll make a few points on this. We're very mindful of the scenario we were in at the time of our proposal, but we were also minded to ensure that we would faithfully implement the Basel package, because we don't want anyone to have a sense of our banks not being able to meet these standards. And that's important for our banks and their future. So that's a key point. But secondly, we were also aware that politically we were asked to make sure that there wasn't a dramatic increase in capital requirements. And that was also part of our considerations. And indeed, other parts included the need for investments in the sustainable economy and society reality that you've already been talking about. So that package is now, I met the rapporteur yesterday in the corridors of the European Parliament. The Parliament is working very well on this package, so we wait to see what the co-legislators say. I mean, perhaps there is a sense that people think, well, now it's different, now we shouldn't implement. I would take the opposite view. I think we have to be firm in our international commitments, and we should not resile from them while being conscious of unintended consequences, because here we're very clear. We want our banks to be strong and we want them to play their full part in the post-COVID recovery and in this new situation that we face because of this awful war in Ukraine.
Sorry, just before we get back to the role of banks during the green and digital transition, and we'll ask for your point of view in a minute, but if I may just ask Nicolas Théry to respond to what you just said.
Commissioner, happy to meet you, and congratulations for the Commission proposal on Basel, which is a very interesting starting point for us, and we have a lot of good discussions. And maybe, sorry, I will come back to French.
I'm going to now switch back to French. Yes, we need international standards. This is extremely important, but we do not have a standardized model for this. And so the real difficulty is confusing banking standards with the diversity of models. These two are not to be confounded. And I think it's extremely important that we have a European banking model. This is much more intermediated, as it were, than in the United States, which relies on a different model and holds liabilities on their balance sheets and amortizes, accompanies, supports this transition. These are separate issues. And if I can sort of summarize Madame McGuinness and Madame Tinagli's proposal, finding the right balance means finding the right balance between the standards and the model. And actually what we're seeing is that we have a housing loan, a market model that is different here in Europe to the US. And we must ensure that the standards and the norms do not crush this model that has very, very strong positive externalities. We saw this in COVID. We saw this in social protections. And let me give you a very concrete example of this. There are conformity rules, standards for conformity. You have to know your customer, KYC. You need to know what the source, the economic source of this. There are needs for transparency and for conformity for the whole of society. And when there were financial sanctions, and I commend the Commission for their speed in enacting these sanctions on Russia, in 24 hours, all banks implemented these, especially the French banks. And really, it is the number, I won't tell you exactly the number of Russian loans that we have. This was extremely very low. And when we compare this to Coinbase and crypto assets and so on, there were 25,000 accounts. And suddenly we find a way to say, long live liberty and freedom, crypto assets are a lever for freedom. And so it's the past and the present, they have to intersect at some point. Here they are applauding Nicolas Théry's words. Do you have, what do you think about what has just been said?
On ne vous entend pas. Voilà.
Un moment, s'il vous plaît, pardon.
Apologies, microphone is on.
I'm hoping that the applause was also for the opening remarks, which I very much appreciate, that our package, as was said, is a good starting point. We believe it's a very balanced proposal. That's the first point. The second point around the European specificities, and here we were very, very conscious, including around mortgages, to take account of those specificities and have phase-ins. So we listened very carefully to everybody that came to us with particular issues and tried to balance the package. I think the issue on sanctions and crypto. So yes, again, thank you for the comments around the work the Commission and our colleagues did here with sanctions. We worked sadly on this before Christmas. We hoped there wouldn't be a war, and tragically there now is. We've got 5 packages which the member states and the financial system, I have to say, have really wanted to do the right thing and implement faithfully and fully, and we're trying to support them in that. But I don't underestimate the challenge for all of our systems to get this right. So it is a work in progress and an important piece of work. But around crypto, I mean, look what we've seen in recent days, in the last 7 days around crypto, where stablecoins weren't quite so stable. I have been very, if you like, focused on this since I took on the role here, because I'm aware that there is a younger generation, but others as well. But there, excuse me, there is a younger generation who are not, if you like, terrified by the risks that might come with crypto and are investing. And I've been listening to those voices, and I've been saying, look, we like innovation, but we really are concerned about risk. And I think on this, we are also well ahead globally, because we have 2 proposals. One, the marketing crypto assets proposal, coming through very well with the co-legislators, but also looking at cybersecurity issues as well. So I think on these areas where you've just mentioned, we are really, I think, hand in glove. And if I were there, I would have applauded you for raising these points, particularly around crypto, because there is a sense in which some in that space want to be outside of regulation, where there are those of us who understand that if that persists and were to prevail and something goes wrong, you might very quickly see the public, in other words, taxpayers, being pulled in potentially to save something that we had no role in. So that's why we regulate now. That's why we want to make sure that, including around money laundering work that we're doing to conquer this, and including sanctions, that there is more transparency in that space. So I hope I get a round of applause for agreeing with that intervention, and thank you.
Oui, vous avez des applaudissements, Madame la Commissaire.
Yes, of course, you shall be applauded as well, Madam. Before we look again at the transition and the role of banks, if we can just come back to what Commissioner McGuinness said about solidity as compared to vulnerability. I am convinced that banks must align for solid pillars in order to ensure their services to the public. We don't speak a lot about one of these, which is, of course, financial solidity, Basel objectives. We need capital, governance, and so on. The second solid pillar that we need, and again, we don't talk about enough, is IT. Informatics. I want to highlight once again all of the dangers and linked to IT architecture. We talk a lot about the virtual world. It is actually very, very physical, this virtual world. There is a data center. Where are they? Well, those of us who had data centers in Russia are not the happiest at the moment. Those of us who believe that public cloud and that having all financial information out in the cloud is fine, well, I'm sorry. No, I don't think that's the case. Data centers must be located, they must localized, they must be mainframed, and they can have dedicated, secure, and confidential clouds in place to protect customers. And this can be a major stake. And then, thirdly, the pillar of the environment, the ecology, the green pillar. So, crypto, part of it. Are we going to make like Bitcoin and use coal mines to run the systems? I mean, you know, this is we're able to shoot ourselves in the foot in a way that is sometimes quite incredible. And then fourth pillar, public freedoms. We must at the same time ensure the completely transparent nature of transactions, and yet at the same time protect privacy, digital intimacy, and financial privacy, because this is absolutely crucial. So when you align finance, IT, environment, and freedoms, well, then you are in the European banking model. Mairead McGuinness, just one word about the role of banking in the environmental transition and the digital transition. We know that some companies, budget in terms of their budget, are struggling to adhere to the Stability Pact that we mentioned earlier. In your opinion, is the role of European banks banks in general? Is this essential to finance investment? As we heard from the president of the WWF, we're talking about 500 billion euros per year.
Okay, well, look, the sums involved are enormous. And clearly in Europe, and we've been compared with the US, we do rely, or our businesses rely on banks for financing. We're trying to develop capital markets union in parallel with banking union because we know that there is a very incomplete picture when it comes to finance across our member states. And we are pushing our vision for stronger capital markets, more liquidity, and equally strong banks, because we want companies to have choice, whether it's loans or equity. We're trying to remove some of those barriers. When it comes to the transition, whether it's the sustainable, I prefer the word sustainable than color coding, frankly. I think it's more clear. So when it comes to this transition towards a more sustainable economy, clearly large sums of money are required, and including the digitalization, plus the costs of making sure that there is cyber security. But I think we should look at this as an opportunity. What we're doing in the Commission is trying to guide private finance towards sustainability. So we have our taxonomy. We will have corporate sustainability reporting directive. I recall many decades ago studying accounting and finance for a diploma and only studying numbers and figures and percentages. If I were doing that today, it would be looking at sustainability criteria and the money. So we will get to a place soon, I think, where financial information and sustainability information have an equal footing. The challenge now, because of the outcome and the impacts of the war in Ukraine for the European economy, are enormous. But again, there's an opportunity to accelerate what we were doing in any event against a horrible background. And therefore, we do need that the banks can provide liquidity and finance to companies, but we do also need to develop strong capital markets. So it is a step-by-step process. We are making progress there, and we want to continue that process. We're also hoping that the president of the Eurogroup will have a roadmap for banking union, which has long been discussed. We know it's incomplete, and we know that we could complete this if there is political agreement and if we can resolve some of the tensions within the discussions between member states. So for me, it is really important that we have strong banks, that they move with the times, which they are doing, and they're not holding on to all of the services they're providing. They are being, facing competition from others in the marketplace, but they are key for our SMEs at the moment in terms of access. And I did reference how during COVID that was very, very important and very visible and very much appreciated. I think around the points you made, Nicolas, around the cyber issue. Here again, every single one of us has received this unwanted text message or an email or whatever, and it's fraud. So the financial system is the most targeted. We know that war can come in many forms, not just the physical that we're seeing and the awful results of that in Ukraine, but cyber attacks are political. The member state I know best had a terrible attack on its health system, so computer records. So we need to make sure that our vulnerabilities there are addressed. We need resilience right across the board. I had an interesting conversation with some elected members to local councils yesterday, and one of the councillors raised the issue of cash and was very concerned that we were making cash less available because she was concerned about the virtual world if things go wrong. And I made the point, two of them. First of all, the Commission defends the right to have cash, and we are really concerned that cash is there for those who want to use cash. And we're working very hard to make sure that we have resilient financial systems around the whole cyber piece. But that is literally a work in progress on a day-by-day basis, because as we advance with technology, the criminals are sometimes ahead of us. And I think that is a huge challenge, even around investments for our financial system, to make sure that they are more resilient and can resist these terrible attacks.
Merci, Madame la Commissaire. Quand j'écoute...
Thank you very much, Madam Commissioner. When I listen to the Commissioner, Nicolas Théry, I feel like I want to ask you the following. Strong Europe, independent, strong, sovereign Europe, that seems to be the key to unlocking all of these issues that we have been talking about today. I will be asking the Commissioner the same question. What do you think about this strong, independent, sovereign Europe? Well, it's a nice formula. I fully agree with that. The matter is, how do we get there?
Parce que pour l'instant,
I would say,
je confirme que la fédération.
for the moment, the French Banking Federation, at least for my part, is fully behind the Europe that you describe. The difficulty that we have with these debates is that, well, yes, it's true, French are world champions in loving Europe when it's a French Europe. And we have had greater success when Belgium, Ireland, Luxembourg, and Czechia, they of course love Europe when it's to their taste. And so what we've done in Europe, we have 27 member states, and we sort of added a 28th, which is Europe. And so, as regards the Crédit Mutuel, it's less simple, less smooth than it was with the previous Europe. And this is very difficult to accept, because the goal was to create a level playing field and to avoid this sort of multi-tier system with 27 plus 1. And actually, what we would ideally like to see is the 27 should meld into one, rather than having another one. But I don't know if you like football, but I'm sure you're familiar with Gary Lineker. And 11 against 11, and it's always Germany that wins at the end. And of course, well, this has perhaps changed recently for the younger ones, but for those of us who are fans of Seville. Anyway, we're not going to get into footy talk just now. What is striking to me is that there is a theory of Gary Lineker in banking union. It is played by 27. It is the French banks that foot the bill at the end of it. And that is not the strong, competitive, productive banking union that we were talking about earlier. We have been really taken to the cleaners in many ways. We do not want a banking union if we're going to be taken to the cleaners again. So, being out off in this way, once okay, but twice no thanks. Yes, thank you for that. I will leave the last word to our commissioner, Madam McGuinness. You can respond to what Saché has said, or perhaps you can respond to my initial question. Sovereign and independent, strong Europe. Does this require a banking union? Perhaps you can begin with this, and then you can perhaps respond to Nicolas Théry. Thank you.
Look, the key to Europe's success, and despite our difficulties, we are strong, and I think we have to remind ourselves of our strength. But the key to that success and strength is unity in diversity. And I regard Europe as a work in progress. But if I speak specifically to Banking Union, Capital Markets Union, so in the treaties, many decades ago, in the early days, we talked about a capital market in Europe, so freedom of movement of capital. There's huge opportunity and potential there. I note the comment around the French view of banking union, but I really appreciate that the French do want to see banking union complete. And it in a way has to happen, and I think it will, but maybe we're not sure of the timelines. One of the things that strikes me when we talk about independence, sovereign, strength, yes. Sovereignty, yes, but not to the exclusion of others. Independent, yes, but not to the exclusion of others, because Europe has a part to play globally, not least around, supporting those who need support, but also around the values of democracy and the rule of law. So I don't think Europe will, embrace itself only, but I think we won't be naive. And that, for me, is the key, whether it's our financial system, where I am really looking very carefully at the impact of Brexit and the need to have stronger financial infrastructure within the EU 27 and needing to make decisions around that, whether it's our pharmaceutical supply chain, whether it's the supply of chips, as you've just mentioned, with the CHIPS Act. We are not naive. We have to understand that the world is more fragmented today than it was in January, sadly. We are looking at supply chains that have not recovered from COVID and indeed are impacted by this war. So we have to be very, very sensitive to our vulnerabilities and address them. And we're doing that, and I think we'll be stronger for it, notwithstanding that this is a time of great change and challenge for governments around the European Union, but it's equally a time of opportunity for us to complete some of the policy areas that we are still working on. And the key for me is to bring our citizens with us, because they're difficult times with inflation, with concerns for the most vulnerable in our society, with all of this transition to more renewables, etc. So we do have to work very firmly with the European Parliament, with our member states, and here internally in the college, to do the right thing, to make the right proposals, conscious of the significance of the world we're in today. And I think one of I'll perhaps finish on a rather down note. I think it's important for us to realise, sadly, that the global financial system will be impacted for the medium to long term because of what has happened. We've had to introduce sanctions to show our absolute disapproval of what's happening, what Russia is doing and Belarus supporting them. We will see the impact of those sanctions grow over time. And there are consequences for the entire global financial system. Maybe a conversation for another day. But for me, the key in Europe today is no naivety, building our strengths, making sure we don't have vulnerabilities that are addressed. And my role is to address those in the financial system. And with the cooperation of stakeholders, including our banks, I think we can achieve that.
Merci, Madame la Commissaire.
Thanks, Ma'am European Commissioner. Thanks for being live from Brussels. Thank you, Nicolas Théry, head of the Bank Federation. Thanks to Atig for her trust, confidence, and the communication department for the organization of this conference. Thank you, Nicolas Théry. I would like a round of applause for Eric, because he did it. He had a lot of people join us, and the entire FVF, MEDEF teams, and the technical teams. And thank you. Congratulations.
And may I say thank you from Brussels. Au revoir.
Commissioner, thanks.